So you're researching how to buy a house and you know you have to pay a down payment. You've been working your little butt off, saving a 3, 5, 10, or 20%. But now you figured out closing cost. I have to buy closing costs. What the heck is that? Does the buyer pay for it? Does the seller pay for it? Is the agent paying for it? Who is charging me these extra costs and why do I need them to close? Don't worry. Here's what we're gonna do today. I'm gonna look at 2 actual settlement statements of 3 houses that were officially closed. We're going to compare these closing costs and you're gonna have a much better understanding of what goes into them and how you yourselves can calculate and estimate what yours are gonna be. We're gonna go line item by line item, so it's gonna be a very detailed video, but I want you to have a much better understanding of how closing costs work. This is the screen that we're gonna use. On the left-hand side, we're gonna see the actual settlement statement that I've crossed off beautifully with my beautiful art. Right side, we're gonna see a little quick Excel sheet I made just to kind of help us track things. First house we're gonna look at is gonna be $330,000. I put here 2 and 3% because a lot of agents or lenders will tell you when you ask them what closing costs are, oh, it's 3%, oh, it's 2%. So we're actually gonna compare apples and apples and see, is it really that much? So let's start off with the initial deposit. So this is essentially the funds that the buyer has put down at the end of the transaction. Now you might think, hey, is that the down payment? No, it's just your clash to close. Clash to close. Depending on if the seller paid some concessions to use for closing costs or you paid everything. In this case, I don't think there was any concessions. I'll teach you how to kind of figure that out on your own. So for now, we're just gonna write that down so we have a record of that. So estimated down payment, that's something we'll find out as we do it more, and the actual closing costs will be once we kind of narrow everything down. That's what it'll look like. So yeah, this is a deposit. This is the initial earnest deposit that's put down when you first get the house. And this is the remaining amount that adds up to this amount. So we're good there. And we get to our first fee, which is the interest. So this is technically a lender fee, so we're gonna make it blue. What is a lender fee? Well, a lender fee is anything that the lender charges as a fee. Pretty simple. But in this specific situation, this is the basically they're charging you interest or per diem for the interest. So in this house, there's 30 days worth of interest being charged at a rate of $32.21. What does that mean? Well, when you close on your house, you're not going to pay a monthly payment that month or the following month. Instead, your payment falls on the 3rd month. Now, let's use an example. If your closing is January 1st, you're not going to pay a monthly payment all of January, all of February. You'll pay it March 1st. You may think, well, in that case, I want to close at the beginning of the month because, yeah, I'm trying to save some money. Yes, I just poured coffee all over myself. And no, I don't want to talk about it. That's fun. See what happens when you're too active. I just want to sit here and be boring. Maybe that will be a little easier. I could just sit with my hands like that and just be like, this is how closing costs are. But the thing is if you close at the end of January, so let's say January 25th, your first payment still falls March 1st. You're paying, so whatever month you're closing in, regardless of the day, you don't pay that month, you don't pay the following month. So that's why they say it may take 1 to 2 months for your first payment to hit, depending on what time you close. So like I was saying earlier, as an incident happened, you may want to just, close the beginning of the month because you get 2 months and it's free money. But the thing is, the lender will charge you a per diem, per day interest of how many days you have left of that first month. So if you're closing on the 1st, depending on what your interest rate is and your purchase price, there's going to be a per diem amount. So for this specific example, they close on the 1st rather. So they have 30 days, 32 to 21 a day. So that's what they had to pay as a fee. Now, if they had closed the 28th or the 29th, where there's only 1 or 2, it would just be 32 times 1 or 2, and it would be like $60, $70. So you could save a lot of money on your closing costs depending on when you close, but then you'll feel like your monthly payment's a lot quicker. So, okay, and you'll see this number go up. So try not to focus on it until we're done. Now, let's move on. Origination fee, which is basically what the lender is going to charge. See, now normally the origination fee is charged by the lender, but it looks like this origination fee went to a separate mortgage company. So I'm almost inclined to think it's a broker that did this, not necessarily an actual mortgage lender. There's something between the actual broker and the lender that did it, meaning the mortgage broker found the lender and was like the middleman. Here, the underwriting fee, though, that's more like what a buyer has to pay for their lender fee. So we'll just call their lender fee $1,055, and we'll say that's their underwriter fee. Credit report, flood certification, tax service fee to the mortgage company. So these are all just lender fees. That basically they are originating and that they're creating as a cost to you. So we're just going to call it miscellaneous lender fees. It looks like the lender gave the buyer some credits. So that's $112 of credits. So always ask your lender, hey, can you give me any credits? Maybe they're doing that. They did it to be competitive, or maybe there was some leftover money, or who knows? Only they know the story. But it looks like they did get some credit from the lenders. That's the first part of any closing cost fee is going to be your lender fees. What is your lender charging you to originate this mortgage? Now, they may name those fees something different. They might have credit report fees and, farting fees. If the lender farted during the transaction, they'll throw the whole thing at you. So this is just going to usually add up to about $2,000 to $3,000. And this is something you can definitely shop around. So when you're shopping around mortgages, don't just ask about interest rates. Don't just ask about the vibes. You want to get a good idea of what their fees are. A lot of times when you ask them for closing costs, they say, oh, we don't know yet until we have the house. No. What are your fees? Your fees that you're going to charge me for this loan. They should have that. All right. So now the next part is going to be everyone's favorite, prepaids. So I'll explain what those are. So here it says hazard insurance to the mortgage company for 4 months at $56.74, and then county property taxes to the mortgage company for 4 months at $107.06. When you purchase a house, there's things that need to get paid for that house. One of those things are going to be your taxes, your city taxes or county property taxes, and your hazard insurance. And your lender most likely will require you to have a hazard insurance or home insurance. You can also call it that. How you pay this home insurance is, let's a nice flat number. Let's say you pay an annual premium of $1,200 to your home insurance. You pay the $1,200, you're insured as long as you pay that deductible if something happens to your house. So if it's $1,200, you are paying with your monthly payment $100 towards your insurance. So your mortgage is a combination of your principal and interest, which is your actual loan payment, your taxes, your hazard insurance, mortgage insurance, which is something else, not what we're talking about today. So if you pay $1,200 a year, the company that's collecting your monthly payments puts it in an escrow account, and they're getting $100 of your monthly payment, putting it away for you. When it's due, they pay it from your escrow account and give it to you. At the end of every year, if you've overpaid into that account that pays your taxes and your insurances and everything, they return that money back to you. Same thing with your taxes. Let's say you're paying $2,400 a month. Well, they're collecting $200 per month from you with your monthly payment, and then they're paying it when they're due. So in this specific case, the lender, most of the time they do this, they collect prepaid to kind of pad that escrow account. They collect 4 months of insurance and they collect 4 months of taxes. They're only collecting 3 or 4 months. If your city, your county, your state, they're not paying $1,200 or $1,500 a year per taxes, they charge you $5,000 or $6,000, this number is going to be a lot higher. That is what might fluctuate your closing costs to another person's. This little appraisal fee, they always do this sneaky thing where they don't put it on a debit, which it should be, but technically it's $530 to the buyer. Sometimes your lender does pay it, but now, especially with the market being tighter, I haven't been seeing them do that, but that is something that you would have to pay. And $530 is what the charge here. I mean, of course, it could range $600, $700. Sometimes there's even like rush fees that they charge. But this is something usually the buyer pays, and it pays it with the closing costs. If not, they'll charge it to you up front sometimes. So continuing with the prepaids though, looks like hazard insurance here. So when you close on your house, you're actually paying the first year of home insurance. So you're going to be insured for that first year. And any monies they're collecting, monthly payments that follow are preparing, or they're the premium for the next year when it's due. So this is going to be technically a prepaid. You're prepaying your first year. So I'll consider it under prepaids. So you're paying your first year of your premium for your home insurance. Guys, you can shop it around. Don't just go with whoever your lender gives you. If you know, I call Allstate, State Farm, call them all, have all of your cars, your VIN numbers, and just say, hey, I'm buying a house. I want to shop around, and I want to do a multi policy, like multi thing, like dwelling. You want to do a car, you want to do everything, like all the insurances in one, and they usually give you a better deal. Really do your due diligence here. You might save a few $100s a year, but your monthly payment might get adjusted 50 to 60 bucks, and then hopefully that's not that tight that you needed it, but it'll make you feel better for sure. And it looks like they got a refund of the earnest money. That's interesting. Here's where it's going to get fun. Here we see that there is a credit to the buyer from the seller. So the seller gave the buyer $800. Why? Well, here in Arizona, and this is something for you to verify with your state, is the question is, how do property taxes get paid, or how often? Here in Arizona, they get paid every 6 months, and they get paid in arrears. Not in the rear. It does certainly feel like it's in the rear, but in arrears means past tense. You're paying for things that just passed. So I don't know the months on top of my head. Let's just make it easy and say January to June, those 6 month periods. Once it's June 1st, you owe property taxes from January to June. Likewise, if you are, in December, for January 1st, you'll get the tax bill for the previous 6 months. So what happens when you're in the middle of those 6 month period and the seller's selling their house? If the seller's lived in the property for 3 months and there's still 3 months left to collect, well, the seller is going to pay the 3 months that they've lived in it. That's why there's a credit. And the remaining 3 months are going to be paid by the buyer. So what's probably happening here is they collected about, was that July 1st to November 1st? So they're collecting about 4 months, I would say, or ish, right, of that. Now here, they obviously collected more than 6 months from the buyer, sorry, right here. However, what probably happened is the lender's probably not only just taking what they need, but they're padding it further with more prepaids. That's how the taxes will work. And once again, like I said before, that's what's going to vary. If you're paying an absurd amount of taxes of your property, like Austin, Texas, like I think it's like $5,000 a year, it's insane, then that number is like quadruple. If you're looking at a neighborhood, the property taxes are public information, so you can get a good idea of what that would be. You can find when they're due, so you can get a good idea of like estimating when they're due, around the time you're going to close, so approximately how much you're going to have to pay monthly, how many of them. And then of course your hazard insurance, you might not know that, but what's stopping you from calling a local insurance company and asking them, hey, how much is the average payment for, or the average premium for a house in this range or whatever? Why not? Maybe your lender probably, or like kind of like I got these sheets. You can probably talk to a realtor or lender and say, hey, can you look up your last settlement statements in this neighborhood and give me a good idea what the fees are going to be? Actually, it might not be a bad idea to reach out to them and ask them, hey, do you mind blocking out information and give me just some closing sheets so I know they're going to cost. All right, so far we're up to 42.76, approaching that 2% range, but not even close to 3% yet. We are moving on to the next part, and this is of course depending on if you buy a house with HOA or not. But basically after this is the HOA fees, and HOAs are notorious for fees. They're literally called, they might be called FOAs, because that's all they really do. They collect their checks and they write you tickets because your bush is too long. Your house bush. So it looks like the reserve fund fee is $150. So this is probably a fee they use to pad their reserve funds. Transfer fee, the fees they charge to transfer ownership, and of course prepaid. So they're also collecting their prepaids November and December, $230. Fun fact: if you actually collect closing costs from the seller and they're in excess to what you need, and it's not enough to do a rate buy down, you can actually request and coordinate for the additional monies of the closing costs to go to pay more HOA dues, or like more prepaids in HOA, so you can pay those in advance. So make it work. Don't just bring it up last second and say, hey, I saw this YouTube video. No, see if it's doable and make it work. All right, now we're gonna go into the title fees. So your state probably has a title company or escrow company. They're basically the middlemen of the transaction. They handle all of the paperwork and they verify title is clean. They also provide the insurance of the title, so title insurance to the next buyer. Your states might have different rules about this. In my state, the seller always pays the title fee for the buyer, and the buyer and seller split the fees 50-50. If you want to be a super Chad and want to be like, hey, I want them to pay everything, I mean, I guess you can do that, but title fees, they're just kind of usually the way they are. you probably are better worth spending your money or your energy fighting something else like price or closing costs than the title fees. So, or, you know, who's paying what. So figure out, you know, ask ahead if you want to get a good idea of your neighborhood. So anyways, here, escrow fees is $763. And of course the loan policy, a little extra fee, a little extra fee, a little extra fee, title agency, recording fee, other title fees. So all that fun stuff. So title fees, they're the ones that probably going to be the second, if not the biggest fees. So you may, once again, these are variable depending on the time of the season and what area you're buying. But if you call a local title company, or you simply do what I asked and just basically get this information, you can get a good idea of what that monies are going to be for in your area. So title fees add up to about $19.39, and that's the biggest one. So in this specific house, it looks like they paid approximately $6,760 for 47 cents of closing costs. So we could assume that essentially the down payment is going to be the remainder amount of the deposit. So we're going to do deposit minus this. It's about 5%. So this is a standard 5% conventional loan, and the closing costs are not 2%. Oh, they're close to 2%, but they're definitely between 2 and 3%. Some things to consider with this specific example. It's an older neighborhood, older home, cheaper home. So all these things come to mind. And of course, so if you're buying something on 300, 400 range, fees are pretty low all across the board. Doing a basic conventional loan, you're probably gonna be paying about that 2% range. If you want to take a picture of this, now's your chance. Let me post for you. Okay, for the next house, it's going to be a lot more expensive. So let me get some data out. While I get the data out though, by the way, if you're not doing anything after this video, there's another video I made called What to Look Out For When You're Buying a House. Very simple things that can save you a lot of money and time and energy. So add that video to your watch next list. Go check it out. Let me know what they think. If you get freaked out by the comments about toenails, just don't worry. You have to watch the video to get what that means. Okay, so just relax. Now let me get the next one ready for you. All right, and the next one is going to be 510,000. Sorry, not 550. And 2% is going to be approximately 10,200 and 15,300. So for 3%. So we're going to see if that is the range they land in. Total deposit made by the buyer was going to be 56,375 with 65 cents. So they probably put a bigger down payment. I'm assuming $51,000. So it's about 10% down there. Easy, solved it. So here, remember what I taught you guys in the previous one. This one closed on the 23rd, and so there's only 7 or 8 days, of per diem. So that one, even though the per diem is higher because it's probably a higher monthly payment, that per diem amount ended up being a lot lesser. Yes, you have to pay your payment sooner. However, it's nice to get that be a lot lower. Looks like there is a processing fee. So looks the lender names it processing fee in this one. They charge an appraisal rush fee. The lender as well, and we're gonna actually find the appraisal here. So it looks like the appraisal is only $500 here. We're gonna add the rush fee and the appraisal together, so it would be 125 and 500, so 625 total. So overall lender fees about actually less than our previous one, even though the purchase price is higher. Oh, the per diem really made a big difference. That's right, because if this was only 8 days, it would have been a lot less and would have been a lot cheaper. But yeah, look at that. Just because the time of the month that they closed, they got to pay much less closing costs than the house, $200,000 cheaper. The more you know, as they say. Okay, next we have the insurance, the prepaids essentially. So it looks like they collected 3 months of the insurance at $98.92 a day or month, sorry. So that's about let's just put PP insurance. All right, come on, we're all adults here. Let's not laugh. Stop laughing. There's a PP for the taxes, and then there's the actual insurance premium. Insurance premium is $1,187. So the house is bigger, so it looks like it definitely goes higher there. One thing I will be adding to these prepaids is going to be home warranty. So it looks like the buyer opted to buy a home warranty for $674. Home warranties, guys, are essentially these companies where like you give them money in the beginning of the year, and if anything happens to break, have like a list of contractors that they have already that they have agreements with. Then you call them, you pay like a fee, like $60, $80. They send whoever they have to go fix it as cheaply as possible. So essentially, it's a gamble. They're taking all this money from all these people and they're hoping that no one uses them. And first year is always cheaper. Years after that are more expensive. They do give people a lot more assurance and, you know, protection, you know, especially if you're nervous about that stuff. But I recommend you guys just plan, have savings, and put on your big girl, big boy pants if something breaks. Higher prepaids, but more expensive house. Makes sense. HOA, everybody's favorite. Looks like they are advanced assessments, so they're prepaying the first quarter 2022, paying a transfer fee, a management proration, 306, but you subtract the cents, so it's what, 305.99. Escrow fees, let's see if it remains to be the second most expensive here. So $895, all the loan policy, all the additional little fees, you know, the deed or recording and trust and all those weird random fees. It reminds me of a joke. What is a wench? A wench is what you use to fix the engine. Looks like it's a lot less too. Oh, still about the same. $23.37. So, estimated closing costs for this specific transaction are going to be $7,788. It's a 10% down conventional loan, which means that the down payment should be about $51,000. So that's basically it. There is some honorable mentions here. Like, for example, I see that they got a credit from the seller. Probably that was during negotiations and Binzers what probably happened. Or who knows, maybe they got the offer accepted and they said, hey, $1,000. Here, you can have it if you get the offer accepted. So all in all, it's going to be closer to $7,788. So now, keep in mind, it should be relatively the same in your area. So just the taxes are going to vary. So if, for example, let me look up a random house should I look up in Lubbock, Texas? You guys like Lubbock? Put Austin, Tex. Austin, Zillow. Oh, I lost my voice there. And I just want to get a good idea of property taxes. Let's see, this house for $600K. Oh my gosh, $93.29. So that is going to be drastically different. So $93.29. Wow. Okay. So approximately, what is that, monthly? $777 a month. So it looks like it's annual taxes and they're due by January 1st. So let's say they collect 4 months or 6 months, depending on what time of the year you close. So if they collect 6 months of prepaids, that's going to be $4,664 just for the taxes. And that's going to be a massive hit. So like for you guys, even if everything is about relatively the same, you pay 6 months in advance. Now you're paying $12K of closing costs. God forbid you pay the whole year ahead of time. So that's why your property taxes may change. I know like in California, there's Melloru's and different ones you can add there. Do your thing, do your research. Essentially, that's how the baby rolls. Sorry, baby's on my mind. Wife, we're expecting babies soon. So if you don't mind, do your research. And if you don't mind leaving a comment with like how much an estimate for the price range. So for example, you can say estimated $400,000 price range in Lubbock, Texas is going to be this. This is the estimate. Just to, you know, people can look in the comment section and get some help there, you know, just to kind of spread the love, if you will.